Hey everyone, Scott here, and this week we're going to talk about 3 ideas to make your savings work a little bit harder for you. So, we're going to talk about a few different good savings vehicles that you can use that maybe aren't as common as, the typical 401k, IRA, bank accounts, things like that. And then stay to the end because we're going to talk about a way you might be able to save on health insurance premiums. So we're going to get into that. So let's get going. So idea number 1 is to use a health savings account. So a health savings account is one that you get to put money into and you get a tax break when you put it in. You don't pay taxes on it while it's in there, while it grows, and then you pull the money out for health expenses and it's tax free. So you have to have a high deductible health plan. Anyone that has a high deductible health plan can use an HSA, and that's defined roughly as having a $1,400 deductible. So you'll need to check into that to see if you qualify. But your employer doesn't even have to offer a health savings account as part of the benefits package. You can open a health savings account at Fidelity. Mine is at Fidelity, and it's just really easy. You can contribute money to it. You're allowed to contribute $3,600 per year, or if you have family coverage, it's $7,200 a year. And if you're over 55, you get to put $1,000 in there. So you're getting a tax break to save for your health expenses. But that's idea 1. Now, idea 2, we're going to supercharge that first idea a little bit because this is the part that some of us maybe get wrong. Not necessarily wrong, but we're not taking advantage enough. So a lot of us, maybe we're using a health savings account, but we put the money in, and then as our health expenses happen throughout the year, we're pulling it back out in the same year. So when we do that, we are not taking advantage of one of the main benefits of a health savings account, and that's tax-free growth. So idea number 2 is to invest the HSA. So once the money's in the HSA, I'm going to encourage you to try to invest that for the long term and not touch your HSA. So when you have health expenses, if you can afford it, I'm asking you to try to cash flow those health expenses, let the HSA grow and compound so that maybe you're in your 50s now and you're going to contribute, you're going to max it out. Well, if you invest that, by the time you hit age 65, a couple things happen. 1, that number has grown and now you get to pull it out tax-free. The other thing is when you hit age 65, let's say you don't have enough health expenses or you come up with an emergency to where you got to tap into it. Well, once you get to 65, you're allowed to pull money out for non-health expenses. Now you do pay taxes, okay, you lose the tax break, but so it's kind of an emergency only thing, but you don't have a penalty. Otherwise, that health savings account, you have to pay for health expenses with it. So that's idea number 2, is to actually invest the HSA. That way you're getting a triple tax benefit. It is the only account in the US tax code that gives you a tax break when you put money in. It gives you tax-free growth, and you get to take the money out tax-free. It's the only account that's like that. So we got to take advantage of that middle one, the tax-free growth. Okay, idea number 3. This will not apply to everyone, okay? But this is an idea that I've seen coming across a lot. We just had someone in where they are paying a lot for health insurance, okay? They're not 65, they're retired, and they're paying a lot every month for health insurance because they just kept what they had before they retired. They just kept that plan. Well, in our last meeting, we went out to healthcare.gov, okay, write that down, healthcare.gov, and we went and looked to see were there some plans based on their income to where they could get a tax credit. That's the way this healthcare.gov works. You're out on the exchange, you're finding a healthcare plan that works for you, and then you get a tax credit throughout the year. So they were able to find some plans where they were going to save about $600-700 a month based on their income. Now, once again, this is not going to work for all of you, but it's an idea to save some serious money on your health insurance premiums until you hit that Medicare age. So where you need to go to healthcare.gov. You need to go to the see topics and then see if you'll save. Don't go enter your phone number, your email address, because you'll get bombarded by health insurance companies trying to sell you a policy. Just go find the see if you'll save section, fill out the little questionnaire. You're not putting any personal info in there. You're just filling out your estimated income, your age, and then it's going to show you what your what your premiums might be with that healthcare.gov. So go check that out. So those are 3 ideas to make your savings work a little bit harder, work a little bit smarter for you. Thanks, and have a great rest of your day. If you enjoyed this video, give it a like, or go check us out at carlsonfinancial.com. We have videos every couple of weeks on different topics. You can find those in Carl's Corner out on the website. And if you want to discuss how an HSA or how healthcare expenses might affect your long-term retirement plan, give us a call at 844-CARLSON to set up a time to talk to one of our advisors, and we'd be happy to see how that fits in to your plan. Everyone have a great rest of your week.